The story this year, as Chong-Lek mentioned, is really about product pricing and companies trying to struggle to adjust to this. On the upper left-hand plot there, you see the NYMEX pricing since 1997. Oil has dropped. It's in green there. It dropped from its lofty $100 plus pricing in mid-2015 to about $15 right now, even touching in the 40s at one time. Gas pricing in red has been low since 2009. People are hoping for $4 gas, but it's probably trending more toward $3 gas right now. And remember that the flurry of more marginal unconventional oil drilling the past few years was really spurred on by these prices being over $80 a barrel. So at these prices, it makes it very difficult to continue. Now the industry is trying to figure out how to react. We saw some of this same situation in 2008, 2009, and they're trying to figure out, is this a short-term blip that will recover like then, or is it going to be more longer term? On the international front, it's a slightly different story, which is why we added the currency trend slide on the right-hand side. You can see the increasing strength of the U.S. dollar versus other currencies. It's about 20% up in the year, and that's a big change for our international clients paying for dollar-denominated products. Now, the oil price drop has obviously made a dramatic effect on drilling levels in the U.S. This graph shows basically the oil and gas industry activity levels. In the red, you see the drilling rigs for gas, and in the green, you see the total rigs and oil rigs in there. You can see that they dropped a lot in 2008, 2009, but so far this year has been a very quick decline. Gas rigs have gone down from about 350 to 220. Oil rigs have gone from 1,600 to 650. The count has dropped to over half in a very short period of time since the fall. But fortunately, recently, it's kind of leveled off. It's kind of flattened, so rigs are a little bit more stable the last maybe couple months. On the international front, we've seen a similar occasion as we saw in 2008 and 2009 with a drop, but not nearly as dramatic as in the United States. So this is an amazing story right here. This is the U.S. historical production forecast on this graph. You can see on the left-hand side, on the upper left-hand side, the U.S. oil production since 1920. Remember that we really started in the early 1900s with oil production. You can see the production peaked out in the early 70s and stayed at a high level through the 80s, actually the mid-80s. In the next 25 years, there was a slow and gradual decline to the mid-2000s. Then spurred on by increasing oil prices, we were able to take the successful technology that we got from gas well drilling and exploit some of the tight oil sands, and we could see increased production very quickly. This is unprecedented. We went from basically 5 million barrels a day in the United States to over 9 million barrels a day, almost reaching a peak that we hadn't reached before, and that was in a time of less than 4 years. On the bottom right, I've also included a forecast from Wells Fargo, and that shows what the incremental production has been since 2009. You can see the dramatic increase, and that they're forecasting a little bit of a decline and then an increase after that. But I will tell you that the latest news is that we've heard is about oil and gas in the United States will be down about 55,000 barrels a day in May, and it's forecast to be down about 90,000 barrels a day in July just from the shales alone. So with this rig drop, we have actually seen some effects not only from the rigs but from the production, and it does go down pretty quickly once it starts. So we're hopeful that the production will be modified going forward. Now, what about gas and the gas story, and in particular the unconventional gas? This plot shows U.S. natural gas production from 1990 to 2035 projected. The unconventional sources are shown in each of these color bands here. You can see the unconventional, it's conventional and unconventional. The unconventional pieces are the coal bed methane shown there in green, as well as the tight gas in red, and the shale gas in tan on the top. You can note that the share of these three unconventional sources was about 35% in 2005, and actually on a declining trend. So that's why the U.S. was looking at importing gas at that time. Fast forward to 2010, where the line is on the graph, and that share from those three sources is 58%. So it's gone from 35% to 58%, and it's projected to be 77% in 2035. with the shale gas itself making up over half of the gas produced. And that's projected to continue. So you can see it's a pretty dramatic story that's occurred over the last few years and is projected to continue. So this also explains why the U.S. now is looking to export gas from our country. So what are these unconventional reservoirs? Well, this right here is a picture of the Spindletop discovery in 1901. It ushered in basically the new modern oil business. Up until this point, oil was considered basically a lubricant, not an energy source. The well blew out and flowed 100,000 barrels a day for several weeks, and it averaged about 50,000 barrels a day in its second year of production. Quite dramatic. This compares to the best unconventional reservoirs, which are quite a bit different. The Bakken and the Eagle Ford, which we'll talk about today, they have flow rates of about 3,000 to 5,000 barrels a day, and they can have an initial decline up to 90% in the first year. So this graph shows the unconventional resource plays. You'll notice on the top left there the tight oil and gas sands, and on the bottom the shales, and you see some pictures of each of these. And on the top right-hand side, the coal bed methane. The permeability is a common term that is very important in these plays. Permeability is an important measurement which reflects the ability of fluids to flow through the rocks. And the one common thing you see in these unconventional plays is that permeability is extremely low. Okay, the fluids do not flow well through these rocks unless you do something. Note that coal bed methane on this plot is typically a shallow play, less than 3,000 feet, and that the tight sands and the shales are at deeper levels and also associated with higher pressures. There's also a continuum between these tight sands and the shales. You may get some combination of sands and shales that can be mixed, and they both contribute to production. Typically, these type of reservoirs with low permeability need some natural fractures or cracks in the rock to flow the fluids, or something that's been induced to fracture. So fracture treatments, or fracks as they call them, to induce these fractures to make these plays commercial. What about the fluids that come out of these reservoirs? I mean, they can be very difficult. As you see on this graph, some of these fluids can be very viscous. They don't flow very easily. On the right-hand side, you can see they can be solids. It may require very close spacing or even mining to produce these things in commercial quantities. So they can be very difficult without additional processing. So how did we do it? And we have this shale gas phenomena, and what made it possible? Well, in simple terms, the conventional reservoirs here, we've got the flow rate in these reservoirs is a function of permeability, as we just discussed, the area contacted in the reservoir, and the distance the fluids have to flow. In the old conventional reservoirs, we had good permeability, but we had a very small area contacted by these vertical wells that went straight up and down, and that the fluids had to flow large distances to get to the wellbore. When we got to these tight reservoirs, we had low permeability, as we mentioned, but we were able to frack to increase this permeability. We increased and fracked the reservoir so that we got additional area, but the fluids still had to flow long distances to get to the wellbore. Now with the shales, we've got a new phenomenon. We drill these horizontal wells. We have multi-stage fracks. They contact, not only the permeability is increased because of the fracks, but they contact a vast amount of the reservoir, sometimes drilling up to 2 miles long horizontally. And then these fluids, because they're fracked, the reservoir is cracked so many different ways, they don't have that far to flow, so we get some great results. Now, where are the shales? As you can see from this map put together by the U.S.A, the shales are pretty much scattered throughout the world. They're all over. They don't all have resource assessments as shown on the plot here, but they are two things. They're everywhere. There's a lot of different countries that have them, but also you can see the size is dramatic. They are very large. They take not just acres or square miles. They cover counties and states or even countries in some cases. So the potential is huge, but all shales are not created equal. Not one solution to one shale may not be the same solution for another shale. In the North America area, where the unconventional plays have really been exploited pretty well, up until the price drop, there were new unconventional plays coming online all the time. And that's obviously been stopped a little bit here. If you see on this plot some of the tight gas sands, they're highlighted. We'll talk about those in more detail as we go through this, but the Pinedale tight gas sands and the Bossier Cotton Valley down in the Texas area are in red. The gas shales are quite predominant in this area of the world. In the United States, we have the Barnett Shale in Texas there, which was one of the first ones, and we'll talk about that a little bit more in the next area. We also talk about the Eagle Ford. That's a very large gas and oil play. And the Marcellus up in the right-hand side near New York and Pennsylvania, that is huge, and obviously it's produced a lot of gas also and been part of this phenomenon. On the coal bed methane side, we have the Fruitland coal kind of in the New Mexico area in the central west of the United States. And the primary oil shales, which have made this dramatic increase in oil production in the United States recently, are the Bakken, which you see up there in the northern part of the United States and going over into Canada. Most of the development has been, though, in the United States side. And we also have the Niobrara Formation shale that is in Colorado, and the Eagle Ford portion, that the oil window portion of that we'll talk about, that has made some of these dramatic increases in oil production. So there's a lot going on in this graph, but this is a graph that shows permeability, which we talked about being the ability to flow through a rock on the left-hand side, and porosity, which is actually the storage capacity of the rock. So you can see the unconventionals, the oil and gas reservoirs from conventional to tight to shale reservoirs going from top right to left. What you'll notice here is that the conventional oil and gas reservoirs in the upper right, that they flow naturally. They're in the naturally flowing section, and that the shale and tight reservoirs need to be fracture treated. As I said, they either need fractures embedded in the rock, or you have to create them. There's also a continuum here, as we mentioned earlier. As you go from conventional to tight gas to tight and to the shales, there's a lot of overlap, and where one begins and one ends is not very defined, and a lot of times you have both in a combination in a play. And you'll also notice that the recovery factors decrease as you go from the conventional reservoirs down through the tight and to the shales.